Good afternoon, good morning, good evening, everyone. It is the 29th of January, 2021 on this, it's almost 8 a.m. Eastern Standard Time. Happy Friday. Okay, let's go ahead and take a look at our markets. I'm just going to kind of go down my list here of our foreign currency markets, checking out the daily, weekly, weekly, and 3-week charts to get an idea of what we've got moving on up ahead. So, Aussie Loonie. It looks all right, but the daily looks like it's wanting to roll over here. The weekly's got what I call this the pinch. So at the top right is the composite index for the weekly chart. When you get a condition where you have the composite index line, which is the red line, and then you have its fast average and slow average. The fast average is the green line, and the slow is the orangish yellow one. When all of those lines are together and then you see the composite index cross above or below both of those, I call that a pinch. And what that generally does is it creates a very strong sustained move in the direction of the break. Price action does. So on the Aussie Loonie, I would expect to see prices push south according to the weekly chart here. The 3-week chart kind of would confirm that, yeah, that's a pretty pointed downturn there. So yeah, Aussie Loonie definitely looking at some lower prices. In fact, check out the COT report for the Aussie dollar. Maybe we'll stick with the Aussie dollar today. The last COT report we saw non-commercials pull off 523 long contracts, and they added to the shorts, whereas the retail added to the longs and subtracted from the shorts. But let's check out the week before that. Let's check out the 12th. We had kind of an inverse occur there. We had a whole bunch of professionals take out their shorts, added several to longs, but otherwise that has not affected it too much. And to get to the 5th here, pretty equal distribution. But when you're looking at the COT report from last week, last Friday, which is for that last Tuesday, pretty equal distribution in non-commercials for long and shorts. However, we did see a lot of retailers add to their long positions versus the pros pulling out of the longs and adding minor adjustments to shorts. So I would be looking at the short side of the market here, especially because, if we do start traveling down south, retail traders get hit the worst, and that generally would create a lot of sustained movement south. So be on the lookout for that. On the Aussie Loonie, I'd be looking at a break really below where we're currently at. I mean, ideally below the daily at 97.98. That would be the sell stop. Oops. $97.98. That would also be a break of this current high volume node on the right. And again, we have on the 3-week and the 3-week chart on the top left and the weekly chart on the top right, we have conditions where the current candlestick, there's a significant gap between both the candlestick and the Kijun-sen, as well as the candlestick and the conversion line, or the Tenkan-sen. So that's a very, very normal thing to see before you see a pretty strong pullback. So I'd expect to see that happen starting today and moving into next week. As far as a price level that we would expect it to see support at, and an area for profit taking, just going to look at the volume profile to help establish that range, which is at 95.30-ish. And if we do a fib retracement here, make sure that the drawings are synced too. Yeah, they are. from this prior swing high to the swing low here. And I'm just going to assume that this lines up with the 786 probably on the inverse of this. Yep, it does. Perfect. That's a good spot. So yeah, then we'd have a profit taking zone around that 95.30 zone. So a good 260-ish pips or so. Looking at the Aussie Swiss. Pretty similar story here. We just see really a lot of the same setups here. There's a good pinch. I don't think this one has as much of a move south. In fact, I'm really not a huge fan of how this one looks right here as far as a setup. Looks more like, more likely you would see a continuation move higher as opposed to move south. Even though the composite index on both, on the weekly chart still looks pretty ripe for some downside movement. But given where the Tenkan Sen is at on the 3-week chart and the weekly chart, looks like we have a lot of near-term support. So yeah, we'll just avoid this one. Aussie yen. Now the Aussie yen on the daily chart looks like it could be ready to just dive up here really fast. Except, yeah, this is there's a lot of divergence that exists between the composite index and the let's actually maximize this here. Let me fix this. This 3-week chart tells us a little bit more. We're between, I mean, we're only at 61, so this is not in neutral territory, but it's relatively neutral. But what's happening here is we have this bearish divergence that exists on the Aussie yen, and that divergence is occurring right as we see price having trouble crossing above the top of the cloud. So this is very, very much a resistive condition. You know, this divergence is not when the RSI is at an extreme. It's actually, I mean, it's closer to neutral than it is to an extreme. Remember that we don't use 70 and 30 anymore in the RSI. We use 4 levels depending on whether a market is bullish or bearish. In this case, we are looking at a bullish expansion phase, and so our overbought levels are at 80 and 90. So we are well below that. More into neutral territory than we are into extreme territory on the RSI. So this is actually a really ideal setup to be looking for the short side of the market. Also notice that there is a gap here between price and the Tenkan Sen, which is where I would expect to see prices retrace down to. I'm probably going to take a short at the market near the end of the day today. I'm very comfortable with that, not worried about seeing some major, famous last words, not worried about seeing some major spike up for the Aussie going into the weekend. But I mean, that's within my risk management. That's where I would see prices return down to is 77. So, you know, about 280 pips further south here. Sorry, 320 pips, I guess, is what I would see, and that level should line up with a couple other zones. So that's on the 3-week chart. The weekly chart, yeah, that's the weekly Kijun Sen. Very normal spot to see it go back to top of the cloud, near the top of the cloud on the daily chart. I want to take a look at the weekly and the volume profile quick. Yeah, not seeing a huge support zone there. Let's just look at the volume profile from the on the weekly chart from the lows of 2020 to where we are now. yeah, not a ton of participation in that zone, I guess. You really don't see a really strong profile here. You see a pretty thick profile as you go down below. So this is a pretty, I would say yes, that's a good area to look for a profit target, and then also to go with a buy limit order as well. That's a good zone to look at. Let's see what else. And then the Aussie dollar, US dollar. Really, we've got pretty much the same thing going on here. Now, this is one of the things I love about this chart is that when you look, I get rid of these here. When you look at the chart on the top left, that's the 3-week chart. One of the questions people always ask with the Ichimoku system is, what is the lagging span useful for? Well, you're looking at a great example of it. The lagging span, all the lagging span is, it's the current price action shifted back 26 periods. You can get a better idea of what it looks like, what I mean by that, if we change it to a line chart. And so that's all it is. The lagging span is just a mirror image of the current price action shifted back 26 periods. But what's really interesting and kind of one of the kind of neat phenomena of Goichi Hosada's Ichimoku system is that the lagging span has the same respect for support and resistance areas as price does. So it's not a surprise that we see the lagging span facing rejection up against the top of the cloud. Up ahead here, it doesn't look like there's anything stopping price from moving higher. What stopped prices from moving higher from a technical perspective in the Ichimoku system? It's the lagging span. Couldn't break above the top of the cloud. Now we have a good gap in between the close and the Tenkan-sen, as well as a significant gap between the Kijin-sen and the close. There's a huge gap there. Expect a really deep move south for the Aussie dollar. The daily chart, I don't think is really giving it justice because it looks too consolidative here, but this is another one where I'm looking to short it near the end of the day here. Same with the Aussie yen. The weekly chart, we have that pinch. We look at that weekly composite index drop down lower. It's a really beautiful setup for the short side of the market. Where would we go? Always like to see a confluence of price zones. Yeah, I would say that 68, 70 zone. So that's an 800 pip drop. I really don't think, I mean, when we say 800 pip drop, that doesn't mean it's going to like just go boom right there over a few weeks. It could, but I would, there's definitely getting back to the 68, 60s, 68, 80s, very likely, but also more likely to find support at 7150, where this high volume node is at. That just seems like a strong area for that to occur. But again, in a nutshell, the Aussie dollar has had a beautiful run up. I think we continue to go higher. But in the short term here, prices dropping and moving lower is what's expected. You guys all have a great rest of your week. Have a great weekend. From all of us here at Exchange Rates UK TV, please don't forget to like and subscribe, and I look forward to speaking with you all next week.